Understanding a few key things before diving headfirst into short-term rental investing could save you literally thousands of dollars and lots of frustration. So in this video, I'm going to provide a detailed answer to the top 7 questions that I get from people who are interested in getting into short-term rental investing from my perspective, as somebody who owns 39 short-term rental listings and someone who's worked with hundreds of people over the last several years to help them implement a successful short-term rental investing business as well. And if you watch this video and you decide that short-term rental investing makes sense for you and you want to work together with me personally to buy the highest performing short-term rental possible, you can set up a call with me at the link in the description below, and we can talk through your goals and we can talk through the details of my coaching program and see if it's a good fit for your situation. Anytime that I talk to somebody who's interested in getting into this, I always ask them what questions or concerns or roadblocks that they perceive to have. And by far, these are the top most frequently asked questions of someone interested in getting into short-term rental investing. Starting with question number 1, and this is a big one, and it is, what can I realistically expect in terms of return on investment that I could get from a short-term rental? And I think part of the reason why this is so difficult to wrap your head around in the beginning is because it's so broad of a question, and short-term rentals in general are so broad. There was 500 million bookings just last year on Airbnb. Think about that for a second. 500 million bookings just on one platform, one short-term rental platform, Airbnb. That doesn't include Vrbo, it doesn't include Booking.com, it doesn't include all the direct bookings that hosts get as well. So that's a massive number of bookings across so many different types of properties. And so when it comes to short-term rental investing, a lot of people will sort of pigeonhole vacation rentals as short-term rentals. Like they think of the high-end vacation rental on the beach or in the mountains or whatever that you envision when you say the term Airbnb or vacation rental. But the reality is there's so many different types. So asking this question is the same as asking, like, if I was to start a restaurant, what type of ROI can I expect? Or if I started an online retail business, what type of ROI can I expect? And the answer is just so broad. And so I think it makes a lot more sense to determine what niche within that business that you're looking to serve. And so my goal as an investor is always to invest the least amount of capital to get the highest return on investment, right? That's what cash on cash, a lot of people have heard this term cash on cash return. That's what that measures. How much of your own capital or cash did you have to put into that deal compared to the net profit or the net income or the monthly cash flow that you're getting back? That's what I'm always looking at. When it comes to short-term rentals, you can get kind of inspired and get emotionally attached to properties that don't necessarily give you the biggest ROI, but they're kind of sexy to share on Instagram and to tell your friends that you own. And so what we do, I came up with this rule of thumb to help us stay focused on the highest performing short-term rentals possible. And it's called the 1% net rule. And I've talked about it in other videos. And so for people who follow me, probably have heard this before, but what we do is whatever we pay for a property, so say we're buying a short-term rental for $300,000, we fully expect after all of our expenses, so after our mortgage payment, our taxes, insurance, paying our cleaners, paying for lawn care, paying for a set aside for maintenance every month, absolutely everything, there should be $3,000 a month left over. So that's 1% net of the purchase price, right? So $300,000 purchase price, $3,000 every single month of profit, net cash flow coming in from that property. And so that's the 1% net rule. And if you start looking at traditional short-term rentals, the ones that most people think of when it comes to vacation rentals and Airbnbs, you're going to find that it's extremely, extremely difficult to hit that 1% net rule, especially with single-family properties. But if you look at small multi-units, typically just outside of larger cities, where the price point's relatively inexpensive, but there's a lot of local draws that drive up nightly rate and occupancy. If you have 3 streams of income coming in on one relatively low cost property, now 1% net is a real reality. So that's the rule of thumb that I would recommend using when you're starting to look at properties to determine, is this one that's a great deal, or could you potentially do others? Because we have people every day buying properties that hit that 1% net rule. And sometimes it's even 2% or 3%, which sounds crazy, but those deals are actually out there. Moving on to question number 2, how much time is realistically required to manage one of these properties if I was to move forward with a short-term rental investment? And so when I speak to people considering getting into real estate investing, many times they say things like, I like the returns that seem like they're possible with short-term rentals, but they just seem like they take so much more time and so much more work than long-term rentals. So because of this impression that they have, or this perception that they have, they're often willing to go out then and buy a long-term rental that provides a third or a fourth of the return on investment that's possible with short-term rentals. And they buy this long-term rental that is going to take them so much longer to get to their goal of financial freedom. I've owned both. Lots of long-term rentals and lots of short-term rentals. And here's the reality of it. So there are more steps when it comes to purchasing and investing in a short-term rental. The long-term rental, you buy it and somebody brings all their stuff and they rent it, and that's the extent of it. The short-term rental, you have to buy it, you have to be intentional about creating that experience and furnishing it, and then you have to list it on the platforms to start getting bookings. But once it's listed, the effort required drops way off, and all of a sudden you start getting pretty sizable direct deposits if you purchased the right property. And the key with short-term rentals to understand is that they can grow, your systems can grow organically with the business. So it's very different than a lot of businesses where, you want to go start a restaurant, you got to buy the restaurant, you got to invest in all the equipment, you got to pay for all this stuff before you even start operating. And then the operations are pretty expensive. There's a lot of overhead. You're paying for the rent for the building and your staff and all this stuff. With the short-term rental, you have to buy the investment, obviously the property, and furnish it. But then the operations going forward are extremely lean. I mean, Airbnb charges you 3% per booking, 3% of your booking amount to advertise on their platform. And you can get consistent bookings. I mean, that can be your whole marketing budget. And then beyond that, there's really not many expenses, especially in the beginning when you only have one or two properties. It's a very manageable thing because you're going to get maybe a few messages a day. And so you can automate a lot of the day-to-day activities, including things like managing your cleaners and responding to guests. And so it makes it extremely manageable. What I've noticed is that there's breaking points when you're growing your short-term rental business. It's very manageable for one person all the way up to about 4 or 5 properties. That's typically for us, that was when there was sort of this breaking point, and that's where a lot of people, I notice, if you bought the right properties, you've created a significant amount of cash flow at that point. And you're also at a point where, if you're still working a W-2 full-time job, you're getting to a point where there's more day-to-day management than it makes sense for you financially and physically to manage anymore. Now you've got all this cash flow, you can take a small amount of that cash flow, bring in a virtual assistant who can operate from anywhere in the world, and they can now take over all the day-to-day remote management activities. Because boots on the ground, I never recommend you do. Hire a great handyman, a great cleaner. They can do everything boots on the ground, but up until 4 or 5 properties, I'd recommend everything remote you can do yourself, because it is pretty simple and it doesn't cost much to do. And then once you start scaling and get to 4 or 5 properties, that's when a virtual assistant can take over the virtual aspect of it. And it then is almost no time out of your week. And so there's a lot of people out there who are extremely hands-on. They don't think through systems. And you hear these horror stories of, it was so overwhelming and it took up so much of my time. And then you start asking them about their systems and how they think through systems. And you realize that they were trying to do everything themselves, and it wasn't set up in a way that's scalable. And so I think if you think through the lens of systems and you recognize that growth should happen organically with the size of the property, it can be extremely manageable. And it might take maybe a few hours a week once everything's all set up and your properties are being managed the right way. Question number 3, I'm overwhelmed by the number of places that I could invest. I mean, it seems like an open canvas. Where is the best place to buy a short-term rental? That's what I need help with. That's one of the top questions I get. And it's a great question because it is overwhelming in the beginning. If you plug in, where's the best place to buy a short-term rental into ChatGPT or into Google, you're going to get 100 different opinions and answers. Probably thousands. And they're not necessarily wrong, but it's like, what's the goal that you're trying to get to? Everyone's got an opinion on what's best for you, but until you've identified what the outcome is that you want, you can't identify what tool, because a short-term rental is just a tool to get you to that outcome, what tool is going to get you there the quickest. And so for me, most of the people that I work with, the outcome is financial freedom. They're working a W-2 job. A lot of times they're extremely successful in their W-2 job, mid-career, making great income, have a great 401k, but they realize they only have one source of income, and that's their W-2 job. And so they want to start to replace that W-2 job income so that they have flexibility and could maybe step back from work or work on their own terms or pick a different job or whatever it is that they want to do. You just have so much more flexibility. And so if the goal is financial freedom, then obviously the highest net cash flow is what you want to pursue. So that's going to eliminate a lot of markets right off the bat. A lot of the traditional markets, just once you analyze how much net cash flow you're getting compared to the purchase price and the interest rates today, combined with the high purchase prices, there's just not a lot of net cash flow left over. What we do is we start with the area of the country that I consider to be on sale. Compared to the coast, if you look at the middle of the country, it's the Midwest and Southeast is just the price per square foot is just so much less. And a lot of people who don't live in the Midwest and Southeast, or they have an impression of what it's like there. They're like, well, who would ever travel there? And meanwhile, there's millions and millions of people that live there, and there's millions of reasons that people travel there, whether it's work, visiting family. Actually, people do go on vacation there. And so there's tons of reasons people travel. So you're buying this property at a tiny fraction of the cost, maybe some of these more mainstream or high-end areas, but yet there's still just as many reasons that people are traveling there. So it drives up that nightly rate and occupancy. And so the best places that we've found is just outside of the larger cities throughout these areas where there's local draws that's close to these big population centers, but yet you're buying a property, in our case, like we invest in Michigan City, Indiana, an hour outside of Chicago, we can buy the exact same property in Michigan City for a fourth of the cost as in the city of Chicago. But if you look at the nightly rate and occupancy, it's not that much different. It might be a little bit lower, but it's not a fourth. I can guarantee that. So the net cash flow is so much higher. The regulation is lower, and it just tends to work so much better. Question number 4 of 7, is this something that I can truly do remote? A lot of people realize that in their backyard, this might not work so well, especially, again, if you live in one of these coastal areas where it's super expensive and you can't create any cash flow, but it feels like a big risk to invest in a property that maybe you've never even seen physically. And so is that actually possible? And what I've seen is that the people that I've worked with several hundred people over the last 4.5 years since I started coaching people on how to do this strategy that we do. And what I've seen is that about 50% of the individuals that I've worked with within a couple hour drive, and then about 50% purchase remotely. And the ones that buy remotely have actually had the most amount of success. When you look at the amount of cash flow that they've created, the amount of deals that they've done, it's actually quite a bit higher typically than people who buy locally, which seems counterintuitive. Like, why would that be? Like, if you can go to the property, it's probably an advantage. And I think it does make you feel more comfortable. But what I've noticed is that if you are remote, it forces you to treat it like a business and lean into systems and lean into other really great people who often are much better than you at every component of the business. And that's what I've noticed over time is initially I was my own worst enemy. We bought a property, one of our first ones was right down the street from our house, and I was the one trying to do everything because I thought I need to be there. Any issue a guest has, I got to run over there and take care of it. And what I realized is that, again, there's people who are so much better and more equipped to do that. A really good cleaner and a really good handyman are going to be way better at cleaning and way better at the handyman stuff that pops up than I am, And so having a few key team members in place locally allows you to never actually have to be at that property. And so whether the property was down the street or across the country, I encourage people to treat it as if it's across the country. I literally have properties that I've never been to in over 2 years at this point because I have a great team in place that can handle everything. And so we're not involved in the day-to-day operations, really. We check in on it and we oversee it, but we aren't the ones who are actually pulling all the levers on a day-to-day basis, and we're not involved in any of the boots on the ground activities like cleaning and like handyman activities or any of the other, regular maintenance stuff that comes up. So absolutely, it can be done remotely. And actually, in a lot of cases, it's actually more successful if you lean into it and treat it as if it's remote, whether it is or not. Question number 4A, I guess you could call it, the sub question to the previous question about can you do this remotely is, will I still qualify for the short-term rental tax loophole if I buy a property remotely and I'm not there physically to to do the work. And I've done a lot of videos about this short-term rental tax loophole. It's super powerful, and this is why a lot of people are investing in short-term rental properties these days, is because you get this huge tax write-off. But one of the main qualifiers for qualifying for this tax write-off is that you have to spend 100 hours working on your property in a year. And it also has to be more than any one other single person in the business. And so a lot of people take that as meaning they have to physically be there to do work on the property. That's not the case. The IRS is pretty vague about what they mean by hours, but they give you some ideas, and it can be anything from admin work, it can be talking to your guests, it can be lining up cleaners, hiring cleaners, setting up your listing. There's lots of different activities, and a lot of them can be done remotely. The majority, I would say, could be done remotely. And so over a pretty quick amount of time, you can accumulate 100 hours, and you don't need to be physically at the property. Now, you can't hire a short-term rental property manager because obviously they're going to do more hours or more work than you. And so the stipulation is you have to do more than any one other single person in the business. So you might want to have a few different cleaners that rotate so that not one is doing more hours of work on the property than you, but you can absolutely hit that short-term rental tax loophole material participation requirement if you're remote. Question number 5 is, how do I know when I purchase a short-term rental that it's actually going to book out and it's not just going to sit there vacant and I'm going to lose a bunch of money every single month? And that's a great question, because you don't want to just buy an asset or buy a property and then just hope that people are going to come and book it. I would never suggest that. So instead, what I recommend is always basing your purchase off of actual clear data that exists today in today's market. So let me show you what I mean. So if we switch over to my screen here, I'm going to show you an example of a property that I was just analyzing earlier today to help one of the members of my coaching program to decide if they want to purchase this property. And so a lot of people will ask, do you just use AirDNA or Mashvisor or Rabu, some of these data analytics sites, and that's how you come up with your numbers? And we do use those sites just to identify, is there potential overall in a market? But what I've seen is if you purchase the level of subscription on AirDNA that allows you to plug in an address and then it gives you this full analysis, it can make you feel great because, oh, AirDNA says I should make X amount. But just keep in mind that that's AI generated, and a lot of times I've just seen those be way off, that analysis be way off. And so what we found to be much more effective is to use these data analytics sites to narrow down to the place that has the highest average nightly rate and occupancy compared to the lowest average purchase price, highest income to lowest cost. And then within that market, we look at the comps, the comparable short-term rentals on Airbnb. They're operating today, getting bookings today, to see what the price point is. How often are they booking? So let me just walk you through this real quick. So AirDNA, this property we're looking at was in Savannah. So you can plug in Savannah, and then obviously Savannah is a pretty big market, and so there's sub-markets within AirDNA. This one happens to be in the Midtown sub-market, and so if you click on the Midtown sub-market, it narrows it down to just that sub-market and all the comps within that sub-market. So you can see in this area, there's a 61% average occupancy and 194 average daily rate. And then you can click on listings over here to see there's 218 active short-term rentals in this market. You can see what size each one of those properties is. You can see what channels they're listed on. And then you can see the occupancy curve. And so you can see when the highest demand is in the different months. And so this market, Savannah, happens to be pretty stable here. And so we see it that there's potential here, and then we put the actual address in Airbnb itself. And so once you plug that address into the search bar, then so what's going to happen is this black dot is going to come up here, and every other suggested short-term rental is going to be listed right around that. It's going to pop up right around that property. And so these are all the other comparable short-term rentals. And so what you're looking for is relatively high-performing short-term rentals, lots of reviews. They've been doing this for a while, and you can really dig in and analyze these properties then. So this is the first one that pops up, very similar to the subject property that we're analyzing here. You can see it's got 3 bedrooms, 1 bath. You can see it has 53 reviews, 4.98 stars. So they've been pretty successful with this property. They do a good job with it. And you can see they probably have their details dialed in. You don't want to look at a brand new property because a lot of times it's a new host that doesn't really know what they're doing. And so then you can come over to their calendar and you can see how many bookings do they have. So right now, it's the end of October and November is almost half booked. So that's a pretty good sign that they, if anything, they could be a little low on their pricing, but their pricing is such that they're getting bookings. Even in the slower season here, November's a slower month for this market. And so you can see they're at $231 for their nightly rate. And you have to subtract out the cleaning fee, what you expect the cleaning fee to be, and the Airbnb fees, which, they charge the guest about 14%. But if you subtract that out, an estimate of those, you can understand then what type of nightly rate they're charging right now in this month. And then you can go to other months like the peak season, which is like April, May timeframe, and you can see what's the price point then. And so you pull up a weekend in April, and you can see they're at $322 in April. And so you can look at different time frames on the calendar to understand in the high season, this is generally where the price point is. In the low season, this is where it is. This is how many bookings are on their calendar. They're actually getting booked at that price point. And then you can come down to their reviews and you can actually see when people stayed. So if you click on it right now, what Airbnb likes to show you is their most relevant, they call it, reviews. I like to look at most recent. So you can look at them in order of recency and you can see this one was just 1 week ago. This one was 2 weeks ago. This one was September. This one was September. This one's September. This one was September. So you can see in the month of September, they just had 7 or 8 different bookings. So you can see, obviously, is quite a bit of occupancy. And you can look at August, same thing, July, so you can go back through all the reviews, read all the reviews, see what people love about the property, what they don't like about the property, when those reviews were left, if there's any gaps, and then you go on to the next comp and do the same thing. And after you've looked at 10, 15 comps right in that area, you have a really good understanding of what you can expect in terms of price point, how often properties book in that area in different seasons, what it is the guests like in that area, amenities that they like, a proximity to different attractions. And so then you can go into it with actual data. You can plug all that data into an analyzer spreadsheet and you can know, okay, when I buy this property, it's a very similar property to these 10, even though I'm probably going to even have better quality than a lot of the hosts out there. And I know what they're performing at. And so I can very reasonably expect to get a very similar performance, or even, you can analyze it a bit conservative and go into it with conservative numbers right from the start. Question number 6 is, how much money do I need to have in order to get into short-term rental investing? And honestly, I've seen the entire spectrum of financial situations for people who have got into short-term rental investing, and I've seen it work successfully for that entire spectrum. So everyone from people who have zero of their own capital to invest in a short-term rental, successfully invest in short-term rentals, and I've also seen multimillionaires get into it and use their own capital for it as well. So I think the question is not so much, can I afford to get into short-term rental investing, which I think essentially is what people are asking, but more along the lines of like what Robert Kiyosaki says in Rich Dad Poor Dad. It's not the question of can I afford it, it's how can I afford it? And so there's different financing options that make sense for different types of situations, right? Different financial situations that people have. And so for people on the end of the spectrum that don't have a lot of their own capital or any of their own capital in some cases, I've actually created a couple different videos about how they finance these deals 100%. So I'll put the links to some of those up above here. I'll put an interactive link and you can click on those videos if you want to see how to finance these 100%. But essentially it's a combination of a couple different loans, typically a DSCR loan, which covers 80% of the purchase, and then a private loan, which covers the down payment and the furnishing costs. So you can literally show up to closing, purchase a property, and have the money for the furnishing costs with zero of your own capital. And you can make that work if you purchase the right property. That's the key, because it has to be a very high performing property that's going to cash flow really well, because you're not going to have capital that you can just feed this beast, which is a luxury a lot of people with money have, and it kind of hurts them too, because they can justify buying a bad deal. Now, on the other end of the spectrum, if you have a lot of savings or a big down payment, then you can use conventional financing in a lot of cases. A lot of people have W-2 jobs, and you can qualify for a second home loan or a vacation home loan, which requires only a 10% down payment. You can put down the other 10% out of home equity in your personal residence, or mutual funds that you own or whatever, other capital that you have, you can use that as the down payment and for the furnishing costs. And, you can do that as many times over as you can afford. Eventually, what I've seen is most people that scale are going to run out of down payments at some point. We did. Most people I work with do. Like, you're never going to have unlimited down payments if you want to scale this. And so what happens eventually is you'll get to a place where you're using a little bit more creative financing or a combination of financing methods where, again, you're using that DSCR loan and then supplementing it with private money. Moving on to question number 7, how do I know what the regulations are in an area I'm interested in buying a short-term rental? And then what if they change and get more restrictive and I get shut down after I purchase this property? And this is a great question because you don't want to purchase an asset, think you're going to use it for one thing, and then all of a sudden the rug gets pulled out from under you and you can't do that anymore, right? And so I think it's important to understand that there's a big spectrum of rules when it comes to short-term rentals. So most people, I think, have this impression that you can either do short-term rentals or you can't do short-term rentals. And that's like the two rules, either you can do it or not in an area. And that's just not the case. Like, it is insane how creative city councils and municipalities and government agencies have become with their short-term rental regulations. I mean, it's like some places it's like you can do it X number of days out of the year. In some places, it's like just on the weekends. In some places, if you live in the house and you can have one person stay with you. In some places, it's like you can only do short-term rentals and you can't do midterm rentals. It's a mix of all different types of regulations. So it's very difficult to wade through that and understand in every market what that is. So you have to get market specific. And I think this again goes back to location and buying in the right markets. If you start with the lowest hanging fruit, everything becomes much easier. So instead, a lot of people will say, well, there's a lot of people traveling to these big cities. That's where I think I need to buy a short-term rental. And yes, there's a lot of people traveling there. And those big cities are controlled by hotel lobbyists that spend millions of dollars to sway the opinion of politicians, we should say, I guess, in a nice way, to get them to make rules and regulations that align with their interests. If I'm a hotel lobbyist, I'm not too keen on having short-term rentals all around me in my hotel because they can undercut me and take a lot of my business, right? And so in the big cities, that's where the hotel lobbyists focus because that's where these big hotels are. And that's where it becomes the most restrictive. You saw with New York just about a year or two ago, they basically made it impossible to do short-term rentals anymore unless you live in that property and you're, renting out a room or something like that. So I would recommend just avoiding the limits of the big cities to start with, but you can buy just outside and benefit from these regulations because now they just created a monopoly. They just created a ton. There's still just as much supply, but there's just as much demand, but they restricted supply. So now all that spillover demand is still, like, if you're just outside of where the regulations are, you pick up all that demand. But yet these smaller towns just outside of the big cities tend to be a lot less restrictive. Obviously, there's still restrictions and you have to narrow it down and understand what those restrictions are. So you can start at the state level. Some states are extremely short-term rental friendly, like Indiana, where we live. They've made rules that make it impossible for local municipalities, unless they were grandfathered in, to totally eliminate short-term rentals. They can make safety rules and stuff like that, but they can't totally eliminate it. So you can start at the state level and see what their sentiment is, then move to the county level, then the town level, and then maybe even there's a township or a local HOA or something like that can make rules as well. If you start in the more business-friendly states that are more friendly toward short-term rentals, you tend to have a big head start there, and then you can narrow down to the local level. And then the other key thing to keep in mind is that if you buy the right type of property, so again, we always focus on these a little bit more affordable or budget-friendly properties that are multiple units, and these properties work really well as short-term rentals. They cash flow really high, but at the same time, they still work as long-term rentals. They still have positive cash flow. So if you compare that to a traditional short-term rental, like a high-end vacation rental, that does not cash flow as a long-term rental. That has massive negative cash flow, right? So in a worst-case scenario, say there's a financial meltdown globally or nationally, or there's another COVID lockdown, or regulations shift and a town decides they're going to become much more restrictive. In a absolute worst-case scenario, you can still get positive cash flow, just convert it to a midterm rental rental that's furnished, a long-term rental that's furnished so you can charge more than a typical long-term rental, or an unfinished long-term rental, and it still cash flows, as opposed to if I owned a whole portfolio of these high-end traditional short-term rentals, I have no option. Either I'm going to sell it when everyone else is trying to sell their property because of this big financial meltdown, or I'm going to convert it to a long-term rental and just hemorrhage thousands upon thousands of dollars on a monthly basis. That's not a position I would ever want to be in, and I would ever suggest for anyone else to be in. And finally, before we wrap up, I'll give you one more big bonus question that I get quite a bit, and that is, what do I think of the short-term rental market in general? Where do I think it's heading? Do I think it's a good time to buy short-term rentals? What if the market crashes? I keep seeing all these scary videos on YouTube from Airbnb investors that say they lost a bunch of money with their Airbnbs and these Airbnb bust headlines. And so what do I think of all that? And I've spent a lot of time since I got into real estate investing back in 2011 trying to predict where the market's heading. And I have been wrong almost every single time. And I would feel bad about that, except that when I look at the biggest institutions in the world, the biggest financial institutions that have the most amount of resources, and they are the smartest people supposedly when it comes to predicting where the markets are heading, and I look at their predictions, they are just as miserably wrong as I am. And the reason for that is because it doesn't matter how many tools you have or how fancy your office equipment is, there's way too many variables to ever predict exactly what the market's going to do. You can't predict what the wars that are going to break out. You can't predict what rules politicians are going to make. You can't predict how much they're going to manipulate the currency. All of those things have huge impact in, new regulations, all that stuff. So when it comes to making a prediction on where the market's heading, if that's what your investing thesis or your investing plan relies on, is that the market goes in the direction that you're hoping it goes in, that's again a very scary position to be in. So instead, what I've realized over the years is that if you buy properties based on really sound fundamentals, so what I mean by that is the intrinsic value of that property is super high. So the intrinsic value, like if I was to rebuild that property, it would cost me a lot more than what I'm paying for it today. And so typically that's in a price point a lot of times that a lot of Americans can afford. So a relatively more affordable property that many people out there can afford. So you're in a good position if you ever have to sell that property. The property cash flows, like I said, several $1,000s per month because you're buying the right property that has the characteristics of a property that's going to bring in much more income than expenses. And then in a worst case scenario that you could use that property as a long-term rental and it will cash flow, right? So as a short-term rental, super high cash flow. As a long-term rental, still positive cash flow. I'm still making profit on a monthly basis. And that's my worst case scenario. The fundamentals of that investment are so strong because you can get some great leverage to purchase that property. In a lot of cases, it's 100% financing to purchase that property. And you can replicate that over and over, and your downside's protected. You have big upside. And I know just based on history and inflation that property 20 years from now is probably going to be worth double or more. So I'm buying these as long-term investments. They're paying me thousands of dollars per month in the meantime. And I know that while my guests are paying off my long-term financing, that property is just increasing in value and it's building me a ton of wealth. An investment like that really doesn't matter what the market's going to do, right? If the market goes to 50% tomorrow of what it's worth today, like the real estate market in general across the whole US dropped 50% tomorrow, I'm still financially free. I don't have to go out and get a job. I don't go into foreclosure. I don't really care. I still make thousands of dollars a month per property because it's still generating that income. And again, if I have to convert it to a long-term rental for some reason, I can do that and still make money. It really doesn't matter what the short-term market does. I know long-term it's going up because that's what it does, and just inflation alone is going to drive it way up. And so buy based on sound fundamentals, and then you don't have to care what the market's going to do. And even if the interest rates got to 20% tomorrow, if I'm still cash flowing several $1,000s a month, I don't really care what the interest rates are, because if it works in that environment, I know eventually the environment's going to be better. Eventually they're going to come back down. I can refinance. The cash flow will go up even more. The property value is going to increase over time. All the fundamentals are there. So look at the fundamentals first. Don't try to play the speculation game of predicting where the market's going. So I don't know if short-term rental investing is right for you. I think these are good questions to be asking up front, and these are very common questions that I get quite a bit. So hopefully this helped to answer some of these really common questions. What I do know is that this has been the most efficient path that I've seen for us and for a lot of people I've worked with to get to financial freedom type of cash flow while at the same time building a bunch of wealth and creating these huge tax benefits. So again, if it sounds like this is interesting to you, this is a strategy you think might work for you, and you're interested in working with me personally through this whole process of identifying the highest performing short-term rental and setting it up and getting all your systems in place, then you can set up a call with me at the link in the description below, and we can meet. On that call, we can talk through your goals, we can talk through the details of the program, and we can see if it's a good fit for you. Thanks again for taking time out of your busy schedule to join me for this video. I know it was a little bit of a long one, and you have a lot of choices when it comes to videos here on YouTube, so it means the world to me. God bless, and I'll see you in the next video.